Hi, it's Nick Sharma here, live from APPEC, the live. I've been spending a couple of days here at the conference. We're kind of day and a half, and one of the things I want to talk about is the upstream sector. What we heard over the weekend on the supply growth from OPEC, I think is going to have potentially quite profound implications in the oil and gas industry, and depending on how prices emerge, depending on the supply growth, and potentially the weakening demand. So what does that really mean for the upstream sector? And does that really change the narrative for the sector? And what we've been hearing is a couple of things. I'll probably touch on 3 points. Number one, I think the sentiment for the oil and gas industry is still largely positive. I think there's a growing recognition from stakeholders that we're in an energy addition phase, not necessarily the exponential growth in energy transition. So I think that generally is an impetus for the oil and gas industry to kind of, go BAU and really try to regrow production in the portfolios. But that doesn't necessarily mean it's going to be exactly the same for every single company. When we think about the oil and gas industry, it's made up of a wide array of peer groups, from the global integrated oil companies, the national oil companies, the North American independents, as well as the normal conventional independents. And one thing that's very clear is that companies are still trying to grapple with how do we grow our portfolios in an effective manner and deliver the returns for our shareholders. For some national oil companies, is how do we grow the energy security mandates that we have? Do we focus more on domestic resources? Do we focus more on international growth? But ultimately, growth is back on the agenda. And that begs another question: where do companies grow? And when we're speaking to people around the conference, that's the most nuanced question of all. Where do we effectively grow our portfolios? Because when you look at the industry, it still seems to be in a much more pragmatic way of exploration. Just for reference, I think last year was one of the lowest point in exploration for the last 70 years. And I think that is a concern for the industry because we've got less players in exploration, but we need to grow our portfolios in terms of unlocking new basins. So the positive side of this is, look, if we look at the global integrated oil companies, they're taking the charge. They're drilling more high impact exploration. In fact, we're tracking and discussing a lot of the high impact wells at this conference. A couple of successes that have happened this year is positive for the industry, but I think we all acknowledge we need more investment, particularly when we think about the current supply outlook, where we've heard a lot of people speak about this conference. I don't think there's a great degree of recognition that as we move into the early part of next decade, if we continue with the current investment spending, particularly on the exploration side and the resource conversion, we may not be actually as healthy of a state from supply as we think we are at present. The third point really to talk about here is the service sector. It's not really a core theme in this conference, but it is a core theme in the discussions I've been having. I think the supply service sector has compressed dramatically in the last decade. It's doing well right now if you look at all their KPIs in terms of return on capital, in terms of their order book, in terms of the 4-quarter backlog. They're doing really, really well, but they're not increasing capacity. And I think that is a growing concern for the sector because we are in a high cost environment, coupled with potentially a sliding commodity price environment. And all of them are going to come together when we think about companies looking to FID. How do they effectively do that when they're in a higher cost environment? So that's not an issue I think anyone has been able to resolve completely. I think what is clearly there is partnerships, longer term partnerships and alliances are going to be very critical between companies and service sector to give the service sector the assurance that, hey, we're going to partner with you. Please invest in the capacity so we can see our projects through. So, all in all, a lot of really interesting points coming in. Oil and gas is back. Companies are reacting based on their investor sentiment. We look at pathways to growth, and there's many, but also quite equally challenging. And then we've got the whole issue of cost and how do we get that supply chain moving in the right direction to face the industry. So it's been fascinating. We've still got a day and a half to go. I'm looking forward to going back to the conference and hearing what other people are going to speak about. And I look forward to speaking next year. Thank you.